Hello, guys. Welcome to another episode of the Commerce Lab by Ecomcy, the place where everything related to Amazon FBA Pro level and e-commerce. My name is Vincenzo Toscano, founder and CEO of Ecomcy, and today we bring another special guest. His name's Oren Gulasa, and he's one of the top CPAs out there when it comes to really understanding the business when it comes to e-commerce. And that's why I wanted to bring Oren today because I feel when it comes to numbers, that's where most of the entrepreneurs really are struggling, especially when it comes to filing their taxes, how they can do it effectively, and more importantly, how they can ensure that they stay in business because a few of these mistakes can get you out of business pretty fast. And thus, as some of the things, especially as we get into 2026 after a tough 2025, conversation that we should have. So hopefully that can help you as we, get into this coming year. So, Oren, pleasure to have you on the show. Thank you so much for being here. How you doing?
Good, thank you. Thank you for having me.
Thank you, Aaron. So I guess let's start with a quick, introduction, what you guys do, and then of course, as I mentioned, we can dive into the topic about, how people can be efficient with their money.
Okay, thank you. So we are in Miami, state of Florida. We are accounting firm specialized in accounting for e-commerce businesses. We call ourselves the online seller CPA. We have only US based team. So ladies are working here and gentlemen in the office, and we do sell tax return, and some financial reports for people who sell online.
Cool, cool. Thank you for that intro. Appreciate that. So let's start, I guess, with the first question that I always wanted to ask you, which is, what are some of the things you're seeing people doing wrong when it comes to, especially this last financial year? Like, I'm sure you're seeing a lot, especially with all the clients that, as I mentioned, had a tough year in 2025. So maybe let's start with what do you see, e-commerce sellers really struggling and really doing costly mistakes when it comes to their finances and specifically taxes. What are you seeing lately, Aaron?
Well, again, I think most of the time people who have business, they sell online, very successful entrepreneur, the first mistake they do, they rely on the accounting team or CPA that
Mm,
they used in the past in previous businesses. You have to be make sure to look for somebody who knows the business, who speak the language, and know the e-commerce. Because when you launch a new product, you kind of have no idea. You cannot go back to your old CPA and expect them to understand what you do. So having somebody by your side, who knows the business and understand e-commerce is the first thing. The second thing is, like always, expectation has to be met. Also, the financially, when you set up your books and records in financial, you have to align yourself with the business, not necessarily just booking by the bank. What I mean is they have to present financial and check them very frequently, but they have to be managerial, valuable tool so you can use it day to day. These two items from the get go, from the beginning, are super important, and especially a CPA who understand the business can guide you how to set up the financial and the data, which you can use as a tool on a daily
yeah.
basis to run the business.
Yeah. I think I want to start with the first point that you mentioned, which is when most founders transition from traditional business to e-commerce, they just assume that the current accountant can essentially oversee the operation, which is definitely one of the biggest mistakes because we all know that everything that you do in terms of how you deal with your inventory, how you deal with, your expenses and revenue is completely different than a traditional business. So I guess that could be a good segue that we can quickly take in here because I'm sure that a lot of people don't even know what are some of the main differences between a traditional business and an e-commerce business. So maybe you already mentioned some of them, high level like inventory and all of that, but maybe can you give us a bit more insight about, what are some of the things people are assuming that are not right when it comes to accounting on this specific department. Yeah.
Yes, beside the inventory, which is a big item because they really they can determine the profitability end of the year. Beside of it, I can think about social media expenses. Okay,
Mm-hmm.
if you choose to go with somebody who know the business, you will understand the Q4 sometimes is a half of the 50% of the business for the whole year. So the vulnerability and the seasonality, when you pick the most expensive item like social media, you can say, okay, if I have a year that I need more expenses, I can create accrual basis and I can get
Mm-hmm.
the invoices coming up in January for Facebook and all the stuff you made in Q4, we can account for it. So if you account for it on time and accrue for that, and you align it with the revenue that happened in Q4, for the expense happened in Q4, even though you will get the invoices in Q1 the next year. So pay attention to this detail can determine to be where you are in profitability throughout the year. At the same time, when you take a position like this, it's important to be very consistent, right? You want to see it over a year
Mm.
because you want to show over 3, 4 years line that you're doing the same thing consistently and you don't have an up and down with no
Mm.
explanation. So we help a customer doing exactly that, and the planning is also get very beneficial for them.
Cool. So now, when it comes to this kind of planning and everything, the other day it also comes down to the preparation that it takes for you to get to that, because at the end of the day it's something that, especially if you have a lot of transaction going on, is not really easy to do, like pretty straightforward. So the reason why I want to quickly have a conversation about this is somebody listening or watching this episode right now, that they know they're having this issue, they know they need to transition from the old ways of doing accounting, which is traditional business, to the e-commerce way, which is what you just described. How many days, or many weeks or months they should allow themselves for this transition? Because especially if they're heading into tax season, like, do they still have time, or this is something that they should have prepared much more in advance? Like, what is your advice when it comes to that as well?
Well, I will say in general, you need a good 4 to 6 weeks
Mm-hmm.
to transition from the old accounting to integrated accounting. When I mean by integration is, look, like you mentioned, it's very high volume transaction every single day. So if you allow a firm like us to integrate the marketplace into the QuickBook or even Zero, whatever system you use, integration, bringing everything together can make sense at some point because you're going to have the data back up from the year before, but also going forward, you will have a
Mm.
tool, you will have a dashboard that you can look into it every day, every week, and see where you are. And the shift is very taking a lot of effort, but in most of
Mm-hmm.
the time, people benefit because they realize that it translates to saving in tax. So the effort took to do this work for 6 weeks will benefit from a lower tax for the year. So you have to consider that.
Yeah. So, and I think something that you mentioned there is, I mean, beyond savings, which of course is the biggest win, is also understanding where you're sitting when it comes to profitability. I think, I'm sure you're finding this with a lot of your clients. Most people, before they start working with you, they didn't even know, what was the real profitability, because they had so many expenses that they were not categorized correctly, or the way they were essentially put into the system was not within the right kind of timeline. So I would say, when it comes to profitability as well, and I'm sure you see this a lot across your clients, like, what are you seeing? And this would be a very good insight for a lot of people listening to the episode today. What would you say is one of the number one things affecting profitability the most? Because I'm sure you're seeing, advertising spend, inventory spend, Amazon fees. Like, what do you see actually is impacting the most sellers for the last year or so, that you think, wow, like, it's actually surprising you as the CPA of your clients,
Well, I think it's two items. The number one is social media expenses last year. What I see from
Mm,
my clients was relatively higher, maybe more sporadic, not really in
mm.
channel. But if
Okay.
you put in the cross channel, you can lose the balance you want to add in Google and Facebook and TikTok, and then you don't know what each campaign doing it, you put it together. You need to make sense and analyze it per channel, profitability per channel, ad spend to get to the idea where you are. Believe it or not, the second item is actually the owner. The owner
Really?
spends, the owner thinking they're taking salary, they don't really understand how much they can take, what is salary versus
Interesting.
distribution, and the planning. And I've seen even the opposite. People don't take what they should be taking and
Mm,
reinvestment in the business. So we find out most of the time after we do financial for a good year on a monthly basis, we can design a plan for distribution, for owner salary for the next year, and we like to do it so consistent, so in a line that you can predict it. So without impacting the profitability, if you do a good analysis and planning, you'll be able to take the money that support your lifestyle because you want to have higher lifestyle if you're selling good in the e-commerce business. So you want to support your lifestyle, and so we do this planning also on the personal level. So the
yeah.
personal level impacting the business. Yeah.
Yeah, and I think actually that's such a good point because it's true. Like, and that has happened also to me. Sometimes when you're the founder and they were controlling the finances of the business, sometimes you think that the money of the business is your money, but it's not.
Yeah.
It belongs to the business, and then you start seeing this money sitting in the account, and you start thinking of ways to spend it for you personally, which you shouldn't, or start doing expenses that are not within the the best interest of the business. And I guess that's one of the main reasons business become very unprofitable, isn't it?
Yes, yes,
Yeah.
you need to plan. You have inventory to buy the next year.
Mm-hmm.
Everything can be planned because you know the cycle. When you have to put deposit in China and when you have to put the
Mm-hmm.
second deposit and the container coming in, it's all there. But you also have to support your life. But you need to look at the
Yeah.
business as a tool to serve you and not the opposite, right? So
Yeah. Now, you mentioned something there that I hear a lot of sellers struggling with, which is when they make an expense on their business, they struggle to really understand what is the impact it has on the business. For example, if I do a sponsorship of an event or I put an advertising, how will I know the impact on my revenue, right? Because you want to know the return on investment, but it's difficult if you're having a lot of initiatives. I guess this is very, it's a very open question because I know it depends on a lot of factors. But as a CPA, when you see with your clients, is there a way to at least have a sense of what is really helping the business grow and what is maybe an expense that you shouldn't be having?
yes, I mean, in the marketing side, of course, you have the ad spend. It's very easy to measure, and you have all
Yeah.
kind of tools to support your seller board and all these tools
Yeah.
that you have out there. Even do a event that are not too easy to measure, like sponsorship. You
Hmm.
really have to analyze data on a, on a span of a larger period of time, right?
Social
You want
media,
to,
for example, it can be very vague. Social media.
yeah,
Yeah.
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 So you have to spend it on maybe wider months or even years, right, to see the impact. But again, if you monitor the profit and loss on a monthly basis, you will see the graph starting to shift if you're doing something right, and if
Hmm.
not, you will know when you have to stop a campaign and start to generate revenue from the organic aid versus other item. Um, Look, in the
Cool.
end of the day, there's a balance between how much you want to get involved or not. But I say to my clients, you need to have a monthly review of your financial. It sounds a lot, it sounds scary, but
Yeah.
for sure, once a quarter, if you're talking to your CPA, it's going to be better than once a year.
Yeah, yeah. Because I think something that people miss is that if they don't meet on a monthly basis, you know where the business is heading. And if you don't know where the business is heading, you wouldn't even have the opportunity to correct it fast enough, to make a decision that maybe can make the business unprofitable or maybe remove expenses, as you mentioned, maybe are not impactful enough, which I guess open another questions on the expenses side of things. Like I'm sure you also seeing this maybe a lot with your clients, and I'm keen to hear your advice, which is things that have to do, for example, with bringing maybe capitals or loans into the business, because especially last year, and that's why I wanted to briefly touch on this, a lot of business don't have cash anymore. They are struggling. They don't really can buy more inventory and everything. And I wonder if there is a way, at least high level, that you advise for people to make the decision. Should I go and ask for more funding? Should I try to bootstrap it myself? Like, is there something within the numbers when you as a CPA are looking at to have an understanding if the business is capable of not or something like that? High level, of course.
Yeah, so what we do for US based businesses, because we only US based for now, even though we have a relationship with another accounting firm in Europe. What we do here, we say two things. Yes, people like to capitalize on funding from Shopify or from the marketplace that they know you and they know how much money is turning on and they feel confident to lend you the money. But I always say traditional line of credit in traditional banking in US is very helpful. And you believe it or not, some people start very small with line of credit with traditional bank like Chase Bank, Bank of America. They start very small, but then once you get to the capacity, $500,000, sometimes even more, and we help them with all the paperwork one time, then it's a ball involved for the next year and the next year. And I have clients that rely on that heavily because it is the banks at some point understand it is a business. It has the inventory as a collateral. The numbers are there. The cycle are there. So I suggest people, even though you open or started from a virtual bank, try to transition into a real bank name like a Chase Bank or
Mm-hmm.
Bank of America, something real bank in US, because in the long run, they can help you to develop relationship and get line of credit, traditional line of credit, which is better than the one they offer today from your marketplace.
Cool. And I guess in ways that you also see your clients, the ones that are using these solutions. What is usually the thing that clients use this the most? Would you say inventory, of course, but beyond inventory, is there something that you see, especially with the trends, how they're going, where you see, oh, I see a lot of my clients now using this extra budget not only for inventory, but you mentioned social media, which is interesting. But what about maybe uh, having their own website as well, or maybe doing things with retail? Are you seeing some shift in the way some of these e-commerce founders are behaving, or you see pretty consistent in the way this money is being used? Yeah.
Look, when we have a client with a brand that goes very well, and they hire, usually they have their own fulfillment center, even
Mm-hmm.
in Florida or in LA, in
Okay.
California. At some point, yes, they will maybe have interest from a retail to be on the shelf somewhere. I've seen people selling Walmart online, and they got contact from the Walmart store to say, you know what, give us one line product and let's do a holiday sale and see how it goes on the shelf. And then you start to have relationship with the people who are in specific retail, I mean, stores, but not all over, but maybe in an area that has interest. I've seen that. But going back to your question about the funding, one more interesting is, again, people used to take money for the marketplace from Shopify and Amazon funding, even Meta, Facebook funding loan. But there's even something in between. I have clients consistently taking loan successfully from American Express. It's very strong card, very strong tool. When you have
Mm.
a business in US and you manage your expenses only on one credit card instead of five or six or seven, and become to have a visibility,
Exactly.
they will offer you with zero document, maybe one or two
Yeah.
items. They will offer you a very straightforward process to apply for what they call American Express um, partner or American Express line to take funds, and you will have in the same login You will have another login
Wow.
to withdraw money, and you can pay within 18 months, and all of that based on performance. The more you pay in time, the higher the amount
Yeah.
you can withdraw in the next year. And it's very
Yeah.
powerful tool, can get up to $500,000.
Wow. Yeah. I think actually that's something that we haven't touched on, but it's really such a powerful vehicle is using credit cards. I think a lot of people don't really understand the power and the fact of building a report, as you mentioned, because not only it will give you access to more funds, but I think the biggest win is the days that you extra cash flow days that you will have, because now some of these credit cards give you 30, 45, sometimes even 60 days, and that can be life changing for a lot of businesses, right?
This is not a credit card. This is a line of credit offered by the credit company.
Yeah, but it's
It's,
built given the
yes,
the report they're having with the credit
yes,
cards, right?
yes.
Yeah,
It's building because you can connect the banks into the
exactly.
platform. Amex is a bank for any,
Yeah,
for all purposes. So
yeah, yeah, yeah.
we have the
Cool.
marketplace funding, the credit funding, and the traditional bank funding.
Yeah,
So I will suggest people to look into this level. And our
cool.
theme can help you because it's all how you present the financial to support the application with the CPA signature or CPA approval of these financials. You can apply for a good method to support your finance and inventory, for hiring, even for hiring and HR purposes. If you want to
Cool.
grow in your warehouse or you have an activity US, uh, for sure for marketing activities as well.
Awesome, awesome. Great, Oren. So I guess to start coming to a closure, I think I want to highlight a bit maybe extra tips or advice that we can learn in terms of things that you're seeing with your clients. Is there anything else that you feel maybe people are missing out in terms of from a taxes perspective, from an accounting perspective, that you think, oh, I really want people to pay more attention to this, because if they don't, most likely they're leaving money on the table, or is really penalizing their growth? Like, what would that extra thing maybe be, if there is anything else you'd like to add? Yeah.
So we mentioned inventory, we didn't even talk about it, but just to give you one tip about inventory, you have to be very careful how you do your bill of lading, when the inventory actually landing here, when it's considered yours versus still under the insurance or under the manufacturer warranty liability, because the lower inventory you have end of the year, the lower taxable income you will have because its cost of goods sold going to be higher.
Yeah.
In addition, I've seen many people having good brands selling online and then they're opening another brand and mixing it together. So
Yeah.
I will suggest to treat the new brand as investment until they're generating money. Try to isolate it from your main brand that you're selling because then you have a better picture and you can leverage on expenses for the first year and you not necessarily need them, right? But you can move that for the year when you have activities, so you can defer the expenses for that investment to the year when the second brand start to generate money. Right now, you have something to support, and you will start the year one with a more reasonable profit and loss. If I see year one profit and loss profitability of 25%, no brand, I'm asking questions. It sounds like
Yeah. Yeah.
too good to be true. And
Yeah.
then
Yeah.
maybe you did not account for investment that was done there before to establish it. So the more you segregate yourself from the two brands and activities, the better you will have visibility. You understand what's going on. And also, by default, you end up paying less taxes.
Awesome. All right. So, wow, that's actually a pretty good advice, because I know a lot of people, especially, they might be struggling. They're launching new products or new brands, and that's a very good advice. So, I appreciate that, Ivan. Awesome. So,
So,
I think, this is at the end of the day, just covering a few of the tips. There is much more, and I'm sure that's, everything that you guys do when it comes to supporting e-commerce founders. So, tell us more about how these people, watching or listening this episode can reach out and have a deeper conversation about this.
Yes, so they can check our website, theonlinesellercpa.com. There's a link to schedule an appointment. There's a phone call. We are accounting firm in Miami, Florida. Uh, we like to meet people, sometimes face to face, but also virtually, of course. We have clients all over the US, and we doing a lot of work to keep you in compliance. Sell tax work, if you are selling in Shopify or other places but you're not sure when to collect and how much to collect, we do that. And of course, end of the year tax return is a good opportunity to check the business. So please visit our website and call us. We are here, or send us an email at info@theonlinesellercpa.com.
Awesome. Thank you for that. All right. So
Thank
it's
you.
been a pleasure, and hopefully see you soon at upcoming events. Yeah. Thank you so much
Thank
for
you.
being here.
Appreciate it.
Okay.
Thank you.
Bye
Bye
bye.
bye.